There's a pattern I watch for every single day, and when I see it, I know the market's about to move big. It's not obvious and it's not flashy, but it's one of the most reliable signs that something's about to shift. The crazy part? Most traders don't even notice it, even though it shows up right before major market moves. Here's what usually happens. Price forms equal highs or equal lows. Everyone starts pulling in, thinking the breakout is coming, but it's usually just a trap. The market grabs liquidity, wipes out the early positions, and then it makes the real move. I've seen this happen again and again on GU, EU, and even gold, you name it. And once I started building my approach around this pattern, everything changed. I stopped getting faked out, I stopped chasing, and I started being on the right side of the move before the move even started. This week alone, I spotted the same behavior on two pairs, and both trades played out exactly the way I expected it to. It's not magic, but it's just how the market works when you understand the game behind the candles. Most traders miss this, but you don't have to. So let's get into it. So the strategy is really simple. Let's get into the basics. Session and chart setup. The trading session is actively trading from 12 p.m. to 2 p.m. London time. This is a refined 2-hour window during the London/New York overlap, which often produces high volatility in reactionary moves. Then we have the chart time frame, which is the 1 minute time frame for all analysis, setup identification, and your execution. Your time zone reminder, again, ensure that your charting platform is on UTC +1, which is actually London time zone at the bottom right there. So setup criteria, balance price ranges in FVG focus. Primary concepts use the balance price range and the fair value gap, which we'll be identifying on the 1 minute time frame only. Steps to identify, a strong impulsive move in the market. We can mark the balance price range zone that's formed before the fair value gap, and we could wait for it to return into the fair value gap in the balance price range zone. Entry and execution. As you can see, our entry conditions, we have that we should re-enter once the BPR taps into the 1 minute FVG. We have risk management. We use type stop losses and maintain a minimum of 1 to 2 R on all trades. It can be higher depending on, the market conditions and everything, but that's what we usually aim for consistency. Our liquidity sweep before our setup, and again, we look for price to grab the liquidity just before entering the zone. We want to avoid news events as much as possible as well. And again, if you guys want us to pass and manage your funded challenge and get your payout guarantee, just click the first link in the description and we can show you how we've helped hundreds of traders actually succeed and pass a very own challenge. They've gotten a payout and they've only paid after they've received a payout. So click the first link in the description and we can show you how it's done. But it's pretty simple. Let's do a quick SketchUp example for you guys. So as you can see, boom, 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 boom. So the market does whatever it wants prior to the trading time, as you can see right there. And then what we're going to have is a balance price range that could form like this. So this is essentially what a balance price range would look like. It would be when there's a previous fair value gap or imbalance that has failed, but now there's an imbalance that formed on the sell side. So that imbalance is going to be a highly reactive imbalance. Once it comes into the balance price range, the BPR, we can expect it to start distributing towards the downside, where we can easily target 1 to 2 R and such on our, take profit reward. So as you can see right here, boom, we have price just retracing back into that entry point, and that's when it starts to distribute towards the downside super nicely. So let's get into it. As you can see right here, we have price doing whatever it wants to. If it wants to go up, it can go up, and if it wants to go down, it can most definitely go down. So as you can see, we're looking for a balance price range. We don't see any, but what we do notice here is that we do have a nice gap in the market right here that was never filled. Okay, it wasn't filled on the previous side, and it wasn't filled on the more newer side. Okay, in front of the candle, it wasn't filled. So you can see, price then came back into it, as you can see right here. So we could take the range from right here where this candle was formed. So once that candle is formed, we could then enter from this position right here, because this right here is essentially a balanced price range, correct? You can see we have price right here, and what's gonna happen now? gonna go show a position just like this. We could put our stop loss just above this high for a 6 pip stop loss. And what we can do is target 1 to 2 risk to reward ratio, just like this. And then we let price do its thing. So we let it play out, and we just have to be extremely patient with the markets at this point. As you can see, it does end up hitting take profit, and right after that, it does end up shooting towards the upside, maybe because of a news event or something of the sort. As you can see, it does end up shooting towards the upside, but we did hit take profit on a nice 1 to 2 R. Eventually, it does end up going much lower. As you can see right here, it does end up going way lower. So yeah, that's essentially how that works. So let's get into the next example now. And I hope you guys are enjoying these videos. Don't forget to like, comment, subscribe, and share with a friend. And don't forget, you can get your very first payout without ever paying a single penny upfront. So basically, if the service doesn't work for you, you don't pay a single penny to us ever. But click the first link in the description, and we'll show you how we've helped hundreds of traders get funded. And remember, you keep 70% of the profits. We only take 30%. So click the first link in the description. But as you can see right here we go again. So we just let price do whatever it wants. If price wants to go up, it can go up. If price then wants to go down, it can go down. So as you can see right here, we formed another balanced price range right here. Boom. So what we could do, we could look to enter from here. We just want to widen our stop loss a bit, maybe to 7 pips. And then we can target a 1 to 2 risk to reward ratio. You can see right here, we let it play out. Boom. And it does end up hitting take profit. It does end up going much lower than the actual take profit that we have selected. But as you can see, it is a pretty good strategy. So I hope you guys did enjoy this video. Don't forget to like, comment, subscribe, and I'll see you guys in the next one.